All right, glad to have you back. Now, let's get to other conversations now. Well, Nigeria's economy is showing signs of greater stability at the halfway mark of the year. Yes, that's according to, with the growth strengthening and Naira holding relatively firm. But despite the positive indicators, many households and businesses are yet to feel the full benefits as high costs continue to weigh on daily life. The economy is projected to grow, some say between 4%, 4.1% this year, driven largely by services, ICT, and oil and gas sectors. Foreign exchange reforms and central banks' tight monetary policy have also helped reduce volatility and improve investor confidence. However, the real sector continues to face significant headwinds. High interest rates, rising energy costs, and logistics challenge are limiting growth for manufacturers, farmers, and small businesses across the country. Looking ahead, analysts remain cautiously optimistic about the second half of the year. They say sustained oil production, easing inflation, continued structural reforms will be key to translating macroeconomic gains into tangible improvements in the life of Nigerians, while global tensions, insecurity, and debt pressures remain major risk. But my next guest is a research associate and Anchoria Assets Management Limited, Etim Livinus. It's good to have you. Good afternoon. Thank you for coming in.
Good afternoon, Tolu. A pleasure to be here.
Yes. As we assess 2026, looking at where we are coming from, what will be your first, looking at your report from Anchoria, what's your overall assessment of the economy and where we stand at the moment?
Okay, well, basically, I mean, if you look at our report that we recently published, there's a media, report on H2. That's for H1 review and H2, for the outlook for the H2. Basically, that informed our decision in terms of the title. I mean, if you look at the title of that report, it's termed Beyond the Midpoint. Of course, July is the midpoint for the year, right? And then the second part of the second leg of it speaks to positioning for the second half.
Yes.
Right? So basically, if you look at the Nigerian economy, I mean, a lot of resilience, if you ask me. You look at GDP numbers, has been resilient. Q1 came in at 3.89%, year on year. And of course, I understand that the current administration have an ambitious target of over, $1 trillion economy, which for me, it's not impossible. However, it's quite ambitious. So for us at Anchoria, we're pegging 2026 full year numbers at 4% averagely, for GDP growth.
It's still close to what IMF and World Bank is saying, right?
Exactly. I recall the last time I came here, that was we had an extensive conversation on that, particularly around the fact that the non-oil sector will continue to drive, growth in the economy. One particular highlight for the GDP report that came out recently, for the Q1 numbers that came out, was the fact that we still need power. Power is needed for electricity takeoff. I don't know if you remember the last conversation we had. I highlighted extensively on the need for power. I mean, you look at the numbers, year-on-year basis, power declined in Q1 by 15%. That's significant. And I know recently I've seen the government issue over 700 billion in terms of bonds to settle the conversations around, Gencos and gas distributors, right? So the point I'm trying to make is that, we're doing well, right? But we can do better. I mean, we can fix power. I think it would drive an industrial takeoff, something that we really look out for. And so, you look at the other legs of macro indicators that we track, the MPC, just like you've rightly highlighted, recently, keeping rates steady at 26.50%. Personally, I seem to struggle with how businesses are faring at this point.
Yeah.
You look at the asymmetric corridor, just like you rightly mentioned, plus 50, minus 450 basis points. So basically, if I'm a bank, let's say I get funds from the CBN at 27%, I'm supposed to make a spread on it. Yeah. And so that means businesses, are charged over 30% levels for cost of funds. And that's massive for me. So if you look at it from a broader perspective, FPI inflows also comes in as well, comes to FX stability as well, because foreign investors will always come into economies that have, some sort of attractive interest rate, which is common basically. So basically, in summary, our report is more like targeted at looking at the resilience of the economy and looking into H2. We're still very cautiously optimistic, that the Nigerian economy would remain steadfast. Yeah, just in a nutshell.
Indeed. Let's put that to be some achievements and some challenges, what you've identified.
Exactly.
But now inflation, exchange rate stability, like you mentioned, oil production and GDP growth, all of this will influence economic activities moving forward. But which of these indicators do you believe will will have the greatest impact on businesses and, of course, the entire households, and why?
Well, I mean, for me as an economist, I like to link all these things together. They all have multiplier effects.
True.
I mean, you mentioned interest rates where manufacturers have to deal with, elevated cost of interest, right? You also look at oil production, which is hovering around 1.5 million barrels per day. That is very significant as well. And you've seen the government have made inroads in terms of tackling oil theft, pipeline vandalism, and all that. And so the latest data for June came in at 1.5 million barrels per day. That's on an average, and then that's above the quota for OPEC, which is around 1.5 million barrels per day as well. So if we can ramp up oil production, right, that's massive, because that also has implications on FX accretion in terms of revenue generation as well. You look at what's happening in the global space, where oil prices have ticked higher to around $90 per barrel at this time, given the geopolitical tensions in the Middle East.
Yeah.
I mean, this is an avenue that Nigeria can plug in and make those, windfalls count at this time. So if you ask me from even from Anchoria's perspective, it's all intertwined. Interest rate, exchange rate, price stability, inflation, they're all intertwined at the end of the day, and we all feel the impact. So I'd say they're all key variables, if you ask me. Key variables, yeah.
Very important, all
of them.
Well, the federal government has continued with its reforms, aimed at improving fiscal stability and, of course, attracting investment into Nigeria's economy. Well, my question to you really would be that have these reforms begun to deliver, should I say, measurable results, or is it too early to assess the impact?
Well, I mean, we can see the result already. We talk about the banking recapitalization, which is meant to make the banks, very strong in terms of maybe helping out or lending to the private sector, right? Several big institutions have, concluded their recapitalization drive, the likes of FBN, Zenith Bank, Access Co as well. And of course, there are conversations around restructuring the holding structure of these companies, but that's a conversation for another day. The point is the reforms. You've seen FX liberalization come into play. We have, you can look at the parallel market at this time and look at the official market and say there's really no spread. There's really no incentive for me to dwell in the parallel market space because they're all very close. The gap has been closed down, and that's on the back of the FX liberalization by the current administration. You also look at the insurance sector where the NICOM, now called IRC, really have stepped up plans to make sure that all the players in that sector, in that space, are duly recapitalized. And basically, you look at all these reforms happening, and it all points to the fact that you look ahead, it's all in the bid to make the economy stronger. I mean, recently we've seen the reclassification from FTSE 100 and recently S&P 500 also saying they are looking at the Nigerian equities market, in sometime in 2027 to reclassify the market to a frontier market. I mean, we're beginning to see the fruit, yielding, but it will take time. All these things are not cast on stone, and we just have to sit tight and wait to see how all this pans out. For us at Anchoria, like I said, we have an optimistic, view of what H2 would be. But then again, you can't rule out the fact that it's a pre-election year, right? So there was a couple of uncertainties. But particularly for Q3, now I want to just speak to the equities market, right? You look at Q3 and the fact that businesses are about select corporates would likely be releasing their financials. So obviously you have a very robust equities market. Of course, we saw that dip in June, right? But then, give or take, all these reforms, we're beginning to see the fruits, and we just need to, sit in there, hanging tight, and basically, get to see all this pan out. But then it's a long wait. We just have to sit it out and see the reforms.
So as we look ahead now to second half of 2026, what are the biggest opportunities and risks maybe for Nigeria's economy? Which sectors are likely to drive growth moving forward?
Yeah, I like that question particularly because that's something I look out for on a daily basis. You look at the what's it called, the cement players, the manufacturing sector, specifically the cement players. Nigeria has an infrastructure deficit, right? And if you look at the budget for 2026, you have over 20 trillion, budgeted for capital expenditure, and that's massive. Yeah, Q2 is usually a rainy season, so you don't expect, development to be infrastructure to be that high. But then going to Q3, Q4, we expect that sector. And so basically for us at Anchoria, we're big on sectors like, the industrial goods sector, consumer goods as well, and then banking, not forgetting banking. Like I said, given this latest recapitalization drive, it has made Nigerian banks, not susceptible to any form of shocks that would have impacted them previously. So so from an investor, from an investing standpoint, I'm very big, and we at Anchoria are big on the industrial goods sector, the banking sector as well. And of course, if the insurance sector we capitalize greatly, and we see the impact in that space, then of course, yeah, that's a good one. Inflation, I recall before the year started, we had projected that inflation would moderate, right, but barring any significant economic shock. And in February, we saw the Middle East crisis start, and then that has led to a spike in oil prices, right? So, give or take, we still think that inflation will remain elevated, at least from now to the end of the year. However, given the fact that we're entering July, August, September, which is more like the harvest season, perhaps that could cool food inflation, which is still at around 17% levels at this time, right? So we're not out of the woods yet, but we're not in a bad state, if you ask me. So that would be my take on that.
Now let's look at policy actions that you will want to recommend to government. Of course, the Apex Bank in the coming months to sustain economic growth and, of course, inflationary pressures and improve the cost of living. You understand? That's one very big one for Nigerians. What are those policy recommendations that Anchoria is suggesting?
Well, like I said, we're big on power, infrastructure in terms of power. Power has to... And
power would drive a lot.
Power would drive a lot. It would lead to what I call an industrial takeoff. Very important. You also look at structural issues like insecurity here and there that we've seen, kidnappings here and there. We believe, these are things that foreign nationals or even businesses look out for before coming into the economy. I was looking at the capital importation data recently, and of course, over 85% of capital inflows into Nigeria is largely portfolio investments, right? So you look at FDI, and it's very marginal, right? So, and that speaks volumes. And so that's why it's understandable why the CBN or the Monetary Policy Committee have to leave rates at attractive points, right? Because foreign players would likely look at an economy with an attractive rate, so it's very normal for any investor, right? But then we think making or coming up with policies that would help in terms of securing lives and properties, not just for targeted at foreign investors or investors generally, but then you look at farmers, especially in food producing regions, who can't go to their farms because of insecurity and all that. So once we have a thriving enabling environment for businesses to thrive, I believe it would go a long way to help the citizenry as well as businesses.
Well, it's a good way to live it. Let's see how it all plays out as we move on in the year. Thanks so much for coming. Interesting report. It's always good to have you in, man. Take care of yourself. Interesting conversation down here in the studio. We'll be